Mm-hmm. Welcome back to The Critique. Today we're reviewing a really focused market document. It's analyzing supply dynamics, potential oversupply for lithium, nickel, cobalt. Title is Battery Metals 2025, Lithium, Nickel, Cobalt, Who's Oversupplied? So let's just dive straight in. Okay, first up, let's talk about the scope. It's detailed, sure, but maybe a bit misleading given that title. While the focus on lithium, nickel, and cobalt is understandable given their market cap, their influence, the title's broad claim, Battery Metals 2025, risks feeling incomplete without tackling other key components. I mean, I get it. You're zeroing in on the big three, the ones defining high energy cathodes now, like NCM and NCA. That makes sense.
hmm
But calling it battery metals overall and then, well, sticking just to those cathode precursors, that might unintentionally narrow its relevance, don't you think?
I agree. Yeah. The material itself is clearly laid out, but that's selection. It does feel incomplete if you're positioning it as the definitive outlook. You know, have we thought about how leaving out key non-cathode stuff like high-purity graphite, crucial for anodes,
Right, the anode side.
or even increasingly relevant cathode materials like manganese, for LFP, elemental chemistries, how leaving those out limits the whole battery metals picture? Is that link between just these three and the wider energy transition really nailed down? Or is the reader left wondering why only these?
That's a really critical point. If the scope is just NCM, NCA precursors, you've got to manage that expectation right away.
Exactly.
Otherwise, your sharp readers are immediately thinking, okay, where's the anode story? And that friction, it just distracts them from the really good line-equal analysis you've done.
Precisely. And the supply story for graphite is fundamentally different, isn't it? It's mostly mined and processed in China. Switching to synthetic, expensive, technically tricky.
Yeah.
So omitting it means you're kind of missing a really important structural counterpoint to your whole oversupply narrative for the others. So, suggestion time. To really strengthen the claim of being a definitive look at Battery Metals 2025, you kind of have two paths. Either broaden the scope, bring in that fourth element like graphite, or be really explicit about why it's laser-focused just on the NCM, NCA supply chain bits. Leaving it ambiguous just dilutes the focus.
Okay.
And for concrete examples, well, one option, weave in a brief but, punchy section on graphite supply constraints. Not exhaustive detail, just enough to position it as that structural counterpoint we talked about.
Right.
Alternatively, if keeping it narrow is the goal, and focus can be powerful, right? Then maybe tweak the title slightly. Reflect the actual chemistry focus. Something like maybe NCM-NCA precursors, supply and oversupply dynamics for 2025. Sets the expectations straight away.
Adjusting the title or just clearly defining the boundaries up front. Yeah, that cleans up the scope nicely, manages expectations. Okay, let's shift gears. Let's talk about the core angle, the originality piece. The main angle, this who's oversupplied question. It's a clear hook, it's topical right now, but relying only on that, on this short-term, kind of transient market condition, that might reduce the piece's long-term strategic value. Look, the material makes a strong case on the immediate market issues, the current oversupply. That's great, fantastic, really, for near-term traders wanting tactical info this quarter. But for, say, strategic investors or OEMs, policymakers working on 3-5-year timelines, the focus feels very short-lived and maybe a bit predictable for a cyclical commodity.
Predictable is a good word for it. Is there a risk here that focusing only on the current oversupply kind of overlooks the deeper structural stuff, the things driving the cycles in these commodities?
Yeah.
This whole oversupply question, it's often transient, isn't it?
Yeah.
We know from history a glut one year can flip to a critical shortage 3-4 years down the line because the lead times in mining, in processing, they're exceptionally long. So the analysis needs that longevity to really earn its strategic keep.
I think the real so what needs to be sharper here. You've identified the price drop. Okay, that's the data point.
Right.
But the strategic takeaway should be about the ripples from that drop. We need the story of capital destruction. Why are these low prices not just bad news now, but actually a warning sign for future chaos?
Exactly. It's classic commodity economics, isn't it? Prices fall below the marginal cost for the highest cost producers.
Mm-hmm.
What happens? they shut down. Or they delay huge capital projects. And because mining projects take what, 5 to 7 years to come online?
Easily.
That delay is basically baked in for the second half of this decade. That 5 to 7 year supply lag. That's the real strategic story we should be telling.
Okay, so the suggestion then,
Well, we should beef up that so what. Reframe the discussion away from just temporary oversupply and towards the long-term structural resilience, the price elasticity of the whole supply chain. That pivots it, you see, from a tactical piece about the next 6 months to a strategic guide for capital allocation over the next 10 years.
right, elevates the whole thing.
Exactly. So, for examples, instead of dedicating most of the text just to current inventory levels and low prices, which are temporary, right? Use this current oversupply as a springboard. Explore, say, 2 specific forward-looking scenarios.
Like what?
Okay, scenario 1. How do current low prices choke off necessary future investment, which inevitably leads to a supply squeeze in, say, 2027 or 2028? Or scenario 2. How does geographic consolidation, political factors like the IRA in the US, how does that fundamentally change what available supply even means for Western economies, regardless of global inventory sitting somewhere else?
Shifting from just data points to structural resilience. Yeah, that's a huge upgrade. Makes it indispensable for anyone making big, long-term money decisions. Okay, one more area. The timeline itself. This connects to audience alignment. The inclusion of that very specific year, 2025, it creates an expectation, doesn't it? An expectation of really granular near-term operational forecasts. And that might clash with needing to talk about long-cycle mining and political stuff. From the title, I'm thinking the arguments focus super tightly on what, the next 15 months? Which is fine for some industries. Short cycle, perfect. But mining, processing, a 15-month window really only covers quarterly output shifts, maybe inventory changes, not the big project breakthroughs. So it kind of limits the strategic conclusions you can pull from the data you've got, especially since we just agreed we need that longer structural view.
That's exactly the conflict, isn't it? If you lock the analysis strictly into a 2025 window, doesn't that constrain your ability to really communicate the impact of those long gestation projects?
Seems like it.
We know major mines, processing plants, they take half a decade, sometimes more, to hit commercial operation. And those are what define the real sustained supply shifts, not just quarterly tweaks. These long cycle industries, they just demand a longer strategic horizon for commentary that actually influences serious investment decisions today.
Okay, I see the issue. But pushing the scope out to 2030, that feels like a much bigger research job, maybe more than intended. If the author's really trying for quick, actionable, tactical stuff for 2025, what's the best tactical insight we can still offer without, ballooning the scope into a 5-year forecast?
Well, we need to get clear on the purpose of that 2025 marker. If it's purely tactical, predicting short-term prices, okay, then lean into that. Maybe clarify it in a subtitle.
Right.
But honestly, given the depth of the research already there, it feels like the document wants to be more than just a simple trading note.
Yeah, it has that weight.
So the suggestion is to make sure the analysis can serve both audiences. If the idea is to look at investment decisions made today based on 2025's market reality, then you have to explicitly connect those short-term metrics to longer-term projections, maybe out to 2030, 2035.
Okay, makes sense. How would that look practically?
To make it actionable, use the 2025 snapshot, that oversupply baseline, as your foundation, the current state, but then structure the main body around 2 distinct time horizons. You could even label them.
Like?
1. The tactical view. Focus that specifically on H1, H2 2025 price action, short-term inventory draws, immediate operational shifts. Then 2. The strategic view. Use that 2025 baseline impact, the capital destruction we talked about, to actually adjust projected supply-demand models for, say, 2030 or 2035.
Ah, I see.
This way, you give the reader both things, the immediate insight they might be looking for and the essential long-term context they need for bigger decisions.
That dual approach, that nicely resolves the timeline friction.
Yeah.
It acknowledges the market's focus on 2025, but still delivers that crucial strategic framework for this kind of volatile sector. Smart. Fantastic. Okay, so to wrap up this critique, we've pinpointed what? 3 key opportunities to really boost the impact of this very detailed market document. First, the scope issue. Clarify what battery metals means here. Either bring in essential contrasting elements, graphite, maybe manganese, to really justify that broad title, or adjust the title to specifically signal the NCM NCA precursor focus. Just manage those reader expectations right up front.
Mm-hmm.
Second, elevate the core angle. Move beyond just talking about the current transient oversupply. Reposition the analysis to explore the long-term structural resilience and price elasticity of the supply chain. Offer those strategic scenarios looking out towards the inevitable supply squeeze in, say, 2027 and beyond.
Right, the bigger picture.
And finally, use that 2025 timeline strategically. Make sure the analysis serves both the tactical traders and the strategic investors. Adopt that dual time horizon structure. Tactical view for 2025 action, strategic view connecting that baseline to 2030 projections.
Yeah, covers both bases.
Look, you clearly have a deep grasp of the lithium, nickel, and cobalt market dynamics. These adjustments will just help ensure that expertise translates into a piece with real, enduring strategic value for both your audience segments. We definitely encourage you to work through these suggestions. Send the revised material back our way. We'd be genuinely happy to take another look and offer a second focus critique. Thanks so much for sharing your work with us today.